Hi everyone, it's Harry, and I've been saying for the last 6 months plus, or since the beginning of the year for that matter, that it's a good time to buy in Calgary now because we've shifted to more of a balanced market. Not a great time to sell unless you're moving up market. But with that in mind, I thought it'd be time for a good refresher and update on the various plans and mortgages that are available to first-time home buyers or buyers that haven't owned a home for at least 4 years. That's the government's view on a potential new quote unquote new home buyer. So the first thing you can do is if you're you've put away money in a RRSP, you can for each person, if you're a couple, withdraw 60,000 for a down payment. And you can do this yearly, but you have to pay it back within 15 years. And you don't have to start payments till 5 years into the 15-year program. So that could potentially give you a potential deposit of 60 to 120,000 if there's two of you. So something to think about if you're fortunate enough to have at least 60K in your RSPs. Now, the second one it's a new development after these RSP home buyers plans was the first home savings account. Now, these are tax deductible against your income when you put it in, and you can put in 8,000 a year to a maximum of 40K. So all of a sudden, it's a 5-year interval. You've got to think about this, but you've got 40,000 in deductions, and when you take it out on a qualifying home, your first home or so forth, you can have a $40,000 plus, because there's going to be some capital or passive appreciation that you can pay down your home costs, whether it be a deposit as opposed to having a huge mortgage out there. So that's another thing that the government has put in play. So if you're fortunate again enough to put away these funds, they provide some ways of not having this huge mortgage out there on the books for you. And you can utilize our RSPs or first home savings accounts, or FHSAs. Now, the third thing that you might want to think about, and this is a new one, is a $10,000 tax credit that that the government gives you for first time or home buyers that haven't owned a home for the last 4 years, which you can deduct off your tax bill. It's a tax credit, again, reducing your taxable income for that year. So, a decent after-tax savings that, you could use for potentially any upgrades or things you need around the home, because you don't get it till tax time. So that's another third leg that you can use. Now, the fourth one, it's kind of if you're going to buy a new home, there's GST relief by the federal government. What does that mean? That means for homes up to $1 million, the federal government will refund the GST payment you made to you. And some builders might even discount it and they try to claim it on your behalf. That may take some legal hoops to go through, so not many builders may follow through on that. But anything between $1 and $1.5 million, the federal government will also give you another 50% rebate of the full GST payment. So you can get savings on GST all the way up to $1.5 million mark for new homes, if that's the way you're going to go about it for your first home or the home you haven't purchased in the last 4 years. Now, the final thing is CMHC, or insured mortgages, which can be insured by other insurance companies. The federal government has recently reduced the requirements on some of these things. What does that mean? That means for the first $500,000, they require you to put a 5% deposit. And now they've increased the top end. So for between $500,000, $1.5 million, you can they require you to put a 10% deposit. So overall, it's kind of like a blended 7.5% deposit, no longer the 20% deposits that most people see on conventional mortgages, helping, the first-time home buyers in their quest when they put a mortgage. And what does that mean? Most of these insurance companies have, the metrics. The standard one you see on CMHC sites are the gross debt service of 39% and a total debt service of 44%. So those are some of the things that the banks use to make sure that you can qualify for these CMHC or guaranteed loans, or your mortgage brokers do the same. But here's a new wrinkle. If you're a first-time home buyer or someone that hasn't owned something for 4 years, they have now introduced a 30-year amortization. What that is obviously spreads it out from the 25 to 30-year period. Now, and all of a sudden you can afford these payments. So that's another wrinkle that has been put in there to make homes, quote unquote, affordable for Canadians. And for the Calgary market, this should be really helpful in this balanced market where you can get access to some of these properties and make these payments, given the malaise in our economic situation. Because if you think about it, the average home in Calgary is sitting around a little over $600K. And if you do the math, you kind of need about $100 to $110, maybe even $120,000 in total income between two people to make that work on these GDS and TDS requirements. So you're in that ballpark. So Calgary is affordable. And obviously in Edmonton, where costs are 2/3 Calgary's costs, much more so. Hopefully this little information has helped you think about owning a home, because it's a great time to own a home or get into the market right now. And, always try to buy out of cycle if you can. You don't want to be competing with everyone else. That's my 2 cents worth, if you will. Hopefully this is helpful. If you have any questions, or you need any real estate help, please reach out. Still a realtor, so hopefully this is helpful. And if you need any help, reach out to me at Harry at Royal LePage Blue Sky. Otherwise, have a great week.